Folks, I have a major housing market alert for you today based on the latest Redfin data. I'm showing serious declines in many areas of the U.S., but it's not in the way you may be thinking. Stay tuned as I review the housing market from coast to coast on this week's Housing Nerd Redfin update. Now, if you're new to my channel, welcome. My name is Jason Ferrier. I am the Housing Nerd. I've been doing this about 8 years now. I'm a realtor, I'm an investor, so I know what's going on in the market. I'm just not on the sidelines hoping to buy a home. I invest in real estate. I help people buy and sell homes every day. I'm knee deep in the market. And by the way, I don't care if you buy a house. I don't care if you sell a house. I want to give you the data so you can make an informed decision for your own market. All right, now let's get going. Before we get to those metros, we're going to look at a national picture. Again, this is based on the latest Redfin data. I'm not sugarcoating any of this. I'm just going to give you the straight up facts. Let's start with new listings because that kind of gives us a pulse as to what's happening. And at the beginning of the year, we saw a rapid rise in the number of new listings hitting the market. I mean, they were going up and up and up, but that changed quickly out of seasonality. And now we're really barely struggling to get above last year's volume of new listings of people putting their homes on the market. And I'd like to know, why do you think that is? Why do you think fewer people are putting their home on the market than most expected? I mean, there were a lot of folks predicting the inventory would flood the United States housing market in every corner of the U.S. with distressed sellers from Airbnb, bankrupt mom and pop landlords. So far, we haven't seen that materialize, but new listings barely up just 0.7% year over year. Shocking information. Now, let's take a look at active inventory, see how that's doing. And no surprise to this housing nerd, and it shouldn't be a surprise to you if you've been following my channel, that active inventory is falling. It's actually coming down, way different than last year. I mean, look at last year. At this time last year, active inventory was continuing to rise. It wasn't falling. However, this year, inventory falling, unbelievable in a market where we thought active inventory would continue to rise. This may be the biggest surprise of the 2025 housing market. Comment below. Let me know what you think. Now, let's look at homes sold. What's the volume of people actually purchasing homes? Because we do know interest rates have fallen recently. Well, look at this. Homes sold up 5% year over year. So there are more people buying and closing on homes than this time last year, 5% more, 72,454 to be exact. But don't get it twisted, because the homes that are on the market and they stay on the market are taking longer to sell. But now let's get to the median sale price, up 2%, $391,000. And as we go through the metros today, we're going to understand how many are actually up in median sale price and how many are down. And remember, this is a national look, and the metro look I'm going to give you is an overview of the city. It's not your specific neighborhood. So you could be seeing different things happening in your neck of the woods versus what I'm showing on the screen. But that's because this is a 50,000 foot view versus your 100 foot view just in your neighborhood. Now let's look at the median sale price. This is sticky, refuses to fall underneath last year's number, $391,000. That's up 2% year over year. Now, many people say the books are cooked. This information's fraud, corruption, greed, all built into the number. What do you think? Comment below. Do you trust Redfin's data? Let me ask you a better question. Would you trust Redfin's data if this number was crashing? Would you trust it then? Comment below. Let me know what you think. Now it's time for our whirlwind tour of the U.S. in the housing market. We're starting in New York, 1,780 new listings. How we're going to do this is new listings, active listings sold, median sale price, days on market in every single metro. Buckle up. It's going to be a wild ride today. So again, 1,780 new listings in New York, up 0.6%. That's it. And it's amazing how closely this is following typical seasonality in New York City. Like, I'm looking for a surge of new listings. I don't see it in New York. Let's look at active inventory and see how that's doing. Active inventory up just 8%. It is starting to level off, which is a good thing for buyers. And it's kind of following the seasonality of last year. There are more homes on the market, but not a flood of homes by any means in New York City metro area. Now, let's look at homes sold, find out how that's doing. Homes sold up 8% in New York City. Unbelievable. Now let's look at median sale price. headed down. It is declining. The median sale price is declining from its peak this year at $821,000. However, it's still up 6% year over year at a numbing $792,000. And remember, this data is based on closed transactions. The median sale price are real people buying houses. It's the house in the middle. People will say again that the median sale price is manipulated by the high-end buyer. Well, guess what? That's who's buying homes right now. A lot of these homes that are selling are more expensive than they have been the last few years. All right, now let's go to our next metro. Next, we head out to the City of Angels, La La Land, Los Angeles, California. 4.2% down in new listings. So they have fewer new listings than they did this time last year. This is part of that decline that I'm talking about. It's like, man, sellers have just checked out. They're like, you know what? Not going to list my home this year. Not something I want to do. They're going to wait for better days when buyers are more active, because overall buyers are checked out of the housing market too. Don't get it twisted. So let's now look at active inventory and see how that's doing in the City of Angels. Active inventory is falling, declining, plummeting. It's unreal. Like, it started at 21,000 active listings back in late June. Now it's falling like a rock. 19,000 active listings. It's fallen by about 2,000 listings in the last couple months. Still up, though, 11% year over year. So it's not like there's nothing for sale, and there's certainly more than there was last year. I'm just shocked at the unseasonality of this decline in the inventory. And that's not good if you're looking to buy a home in Los Angeles. You want more options, not fewer options. Let's look at homes sold. I wonder how that's doing. Homes sold is basically flat, up 0.9%. So not a lot of buyers out there. It tells me these active listings that are falling, when I showed you that screen as far as the active listings coming down, tells me a lot of people are just pulling their homes from the market. I think that's just sellers being stubborn and frustrated. Tell me what you think, though. Now we get to median sale price, $908,000. That's up 2% basically year over year. Los Angeles home prices are declining from the peak this year at $951,000, but that happens every year in almost every market. Prices decline in the fall. But the point is, right now, median sale price is not lower than last year. It's higher, still higher in Los Angeles. Home prices haven't crashed there. And something else you should keep in mind, this is Redfin data. Last week, I reviewed Zillow data, which is a little different. Nonetheless, you need to look at everything and kind of say, all right, what's happening? You have to take some of this with a grain of salt as well. It's not hyper-local whatsoever. It's a broad brush stroke of the market, but it gives you a sense as kind of what's happening. Now let's look at median days on market. 51 days, that's up 10 days in Los Angeles. So homes are definitely sitting longer. Probably why a lot of sellers are like, no thanks, I'm going to yank this thing right off the market. Now we're headed out to the windy city of Chicago, Illinois. New listings up 4.2% there. We need those new listings probably in Chicago because, quite frankly, that market has been crazy with home prices. They continue to go up. Active inventory is not impressive. We're going to look at that right now, find out how we're doing with active homes for sale. Active inventory, look at this. Like I just said, down, not up, down 3.4%. That's that decline I'm talking about. Maybe not the exact decline everybody is thinking is happening in every market, but nonetheless, this is a decline. A decline of active listings. It's crazy, down 3%. So there are fewer homes on the market right now in Chicago than there was this time last year. And it's definitely fallen out of seasonality. You can see that active inventory count is falling and falling. Hopefully it levels out as we add more new listings to the market. Hopefully the buyers stay away if you're looking for more inventory in Chicago. Let's look and find out how homes sold are doing. Well, homes sold up 3.9% year over year, basically 4%. So there are more buyers right now in Chicago, Illinois than this time last year. Median sale price in Chicago, again, higher than last year, up 4% year over year, $362,000. They peaked earlier this year at $386,000. But make no mistake, home prices are more expensive than they were this time last year. So now let's look at median days on market in Chicago, because this tells us how long homes are sitting. 51 and a half days. So only up 0.13 days year over year, basically the same. Homes are taking just about the same amount of time as they did last year in order to actually go into contract. But here's the kicker. Even in the data you see here, there are probably opportunities in the Chicago market. You just have to be patient and hunt hard. Now let's look at new listings in Dallas, Texas. They're down. It's crazy. New listings are down. Can't believe it. In Dallas, Texas, 4.5%. Seeing a trend here, continued decline in new listings. It's not what we're wanting to see if we're hoping for lower home prices as we enter 2026. We need more inventory, but nonetheless, new listings, it is what it is, down 4.5%. Now, let's look at active inventory. Look at active inventory falling. I mean, this is crazy. Active listings in Dallas is now only up 14% versus last year. Many are saying, hey, Jason, that's like still a lot, right? No doubt it is more inventory than last year. Active listings peaked at 30,000 listings back in July. Now they're actually at 27,000 active listings. So either someone's buying those listings or they're being taken off the market. Comment below. Tell me what you think is going on. Well, it's probably not people buying homes because there are fewer people actually closing on properties in Dallas versus this time last year, down 0.6%. So it must be delisted properties is the reason we're seeing active listings come down. What does that mean? Basically means a seller's going, I don't want to sell this year. I'm going to take my home off the market right now and wait for a better time to sell. Happens all the time. Now, median sale price, where's that? It's actually up, but basically flat. I mean, it's up a fraction of a percentage point, $412,000. And look at where it peaked at. It peaked all the way at $464,000. That was back in 2022, summer of 2022, and now $412,000. So Dallas is way off from the peak of the housing market back in 2022. Now let's look at the days on market. That's up a lot. 15 days. This isn't a decline, but it might as well be because it'll decline prices as homes continue to sit on the market. The dangerous part of what I was seeing in Dallas so far is the active listings are not skyrocketing anymore. If you're a buyer, you probably have a lot of choices out there. The question is, will this inventory continue to be depleted as we go through the winter, leaving us with fewer active listings than we had last year by the end of this year? Comment, tell me what you think. Next up is Houston, Texas. And look at new listings. They can't catch a break, down 8% year over year. Unbelievable. No one had this on their bingo card for the housing market in 2025. Most people, even the most bullish folks out there on YouTube, thought that new listings would skyrocket as we went through 2025, mainly because there was a lot of distress in the market, right? Supposedly a lot of Airbnb owners, a lot of mom and pop investors. I think people want this housing market to crash so bad, many do, that they're just hoping for any glimmer of demise and doom. Is that you? Be truthful. Let me know. But look at this. New listings down 8%, just nuts. Now let's look at active listings, find out how those are doing. They're actually up 13%. 37,273 active listings in Houston, Texas. But what worries me is that graph is falling. It's just crazy that active inventory is not skyrocketing anymore. Let's look at homes sold. How's that doing? Homes sold up crazy, up 7.3%. That's what I'm seeing in a lot of these markets. As we have added a lot of inventory earlier in the year, buyers came out because they're like, man, I could probably get a deal now. I'm telling you, if there's a lot of inventory in your market, you should be writing disrespectful offers. Write an offer that makes sense for your wallet, your family, your budget, not what the seller wants. What the seller wants is almost immaterial to what you write the offer for. Just write them and move on to the next one. Now we're going to median days on market. What do we got there? Up 11 days. Homes are sitting in Houston. See, that's what I'm talking about. There are probably opportunities out there right now. Could be a foreclosure, could be a short sale, could be a new home, could be a mom and pop investor, could be an Airbnb landlord. I don't know. But man, if I'm in Houston, I'm making offers. I just made offers on new homes because new homes, folks, there's a ton of inventory in the new home market. Shout out to Real Estate Mindset, Travis, Spencer, and Melody Wright, because they were on the new home thing before anybody else. And I was like, man, I better watch new homes. And I have watched new homes. I've made some offers. Maybe I'll get them, add them to the portfolio. Let's look at median sale price next. See how that's holding up. Well, median sale price is down about 1% year over year, $334,000. It's less expensive to buy a home right now in Houston, Texas versus Ohio. Unbelievable, right? but that's the truth. Look where they came from in Houston. Last year, they peaked at $353,000, but now they're falling fast, down about 1%. Really, it's flat if you really want to get granular, but $334,000, nuts. Next up is Miami, Florida, where we're looking at new listings down 7.6%. Unreal. I just can't say it enough. It blows my mind that there are fewer people listing their home right now in many areas of the U.S. than last year. I really thought there'd be more distress, didn't you? Active listings, look at this, continues to fall. It's almost like inventory, it's literally vanishing in a lot of these markets. I mean, you had in Miami at one point 20,000 active listings. Now you've got 18,000. Still seems like a lot to me. But nonetheless, you're only up 10.28%. It continues to drop. Let's look at homes sold. I wonder how many people are actually buying homes in Miami. Well, it's actually down 0.6%. If I round up 1%. So there are fewer people buying homes than this time last year in Miami. Again, probably delisted properties, people just yanking their home from the market because they're taking their toys and going home when they don't get the price they want. But look at median sale price, up 5%. Miami's like looking at the housing crash and going, kick rocks, housing crash. I don't want anything to do with you. Up 5%, $574,000. So you scratch your head and go, why is it, or how can it be that homes sold is down? You got fewer people buying homes. You actually have fewer people listing homes. Active inventory is dropping in Miami. So you're like, how can that happen? Well, because the homes that are selling above last year's price. I mean, that's the facts in a lot of these markets. Many people don't want to hear that. That's what I'm seeing, though. You can check the data yourself. Good news for the DC market, up 3.5%. Maybe it's a lot of Doge influence, right? I keep seeing that. Haven't actually seen it in the economy yet, but I have seen it on social media. So you're up 3.5% in the number of new listings, more people listing their home in DC, but it's not skyrocketing by any means. Let's find out how active listings are doing. How's active listings? Man, those are falling like a lot of other markets, only up 7.69%. I'm shocked. And look at the number of homes sold. People are not buying homes in DC compared to last year. So that active inventory is falling, is either expired listings, which, by the way, present great opportunities for buyers if you actually want to get off your rear and go find an opportunity. Look at expired listings. But people are not buying homes like they were last year or certainly the year before. I mean, they only put 1,000 homes in contract on average in the past week. If I go back to 2022, there were 1,325 homes going into or actually closing. So that difference is like 300 homes. It's a good amount. Now let's look at median days on market. How's that trending? Well, 52 days, up 13 days. Holy Toledo, unreal. Like tons and tons of homes are rotting on the market in Washington, D.C. Now for the real skinny, let's look at median sale price. It is falling, and it does fall every time during this period of the year. You can just see every year it falls during the fall. No surprise. $575,000, but that's up 3%. And remember, this is the latest weekly data. This isn't a wrap-up from August. That was what I showed you last week on the Zillow data. That was a wrap-up for all the info in August. Now what we're seeing is actual September real-life weekly data. And it's showing that Washington, D.C. is up 3%. Do you think that's true, or do you think the books are cooked in D.C.? Heading out to the land of the dirty birds, remember that back in the day, into Atlanta, Georgia. New listings down 8%. I mean, this is a 4-year low right now of new listings in Atlanta, Georgia. As a housing nerd, and if you consider yourself a housing nerd, you should be surprised by this. Like, this is a 4-year low of new listings hitting the market in Atlanta, Georgia. Shocking. One of the reasons I'm really shocked about this is that this area of the U.S. is where investors loaded into. Airbnb investors, institutional investors. I thought they were supposed to be net sellers, but somebody forgot to actually tell them to sell their places, though, because nobody is. And look at active inventory. Man, that's going to fall underneath last year. It's coming up. It's only up 7.7% in Atlanta. Just crazy. So if you're out there looking for a house in Atlanta, tell me what's going on. But like overall in the city, I'd be out there looking right now because you could find an opportunity, especially as we enter the winter. And how are homes sold doing? Well, those are up 2.9%. So somebody, I guess, decided to listen to me and go out there and buy a house. Like, shoot, you could probably find a deal. Remember, I'm not telling you to go out and buy today and pay like whatever the person's asking. If you're in one of these markets that's crashing, take advantage of it. Don't sit on the bench this time during a housing crash. If that's what you think's going on in your market and you're like, man, a housing crash is happening now, don't try to time the bottom. That never works. Doesn't work in the stock market. It certainly doesn't work in the housing market. Pick your number. If you think that house is worth 20% less, write your offer for 20% less and go find the deal. Now, what about median days on market? How's that doing? Up a lot, 15 days. This is what I'm saying. There are people out there in Atlanta right now that need to sell. Go find them if you're looking for an opportunity. If you're a seller, by the way, in any of these markets where you're seeing more inventory, longer days on market, you better price your home correctly. Don't overprice your property. That will cause it to sit. Buyers aren't fooled anymore. They're not willing to pay anything that you're asking. They want an opportunity. And a lot of them are actually willing to pay a fair price and negotiate with you if you come correct and actually enter the market at a fair price. So don't be greedy. But it's taking longer and longer to sell a home in Atlanta, Georgia. Now we're looking at Philadelphia, PA, the home of the cream cheese, the Liberty Bell, and brotherly love, and Rocky, by the way. So if we look at new listings of people actually putting their homes on the market, look at this. It's following seasonality, but make no mistake, we have a lot more people with their homes or putting their homes on the market than we did this time last year, 8% more. That's a good thing. So it looks like maybe breaking out a little bit, maybe more distress in Philly than many people think. So what's that doing to active inventory? Let's find out. So here are active listings in Philadelphia, and you can tell they're actually starting to go up right now. But believe me when I say that they are not impressive. They're only up really 4% year over year. And despite the fact that they're headed up right now, they're threatening to actually drop underneath potentially last year's active listing count. Again, if you're a buyer, not what you want to see. Let's look at homes sold and find out what's happening. Homes sold down 5%. So it must be people pulling their homes off the market or the listings are expiring. The reason why we're seeing those active listing numbers drop, although they are rising again right now. So it's kind of a weird situation going on in Philly. It'll be interesting to see if more sellers enter the market as we enter the winter time. And look at median days on market, 1.63 days up. It's 43 days. It's actually a 4-year high for this time of year right now for how long homes are sitting on the market. I mean, back in 2022, they were gone in 34 days. Now, 43 days. So it's not like it's an amazingly high number, but nonetheless, they are sitting longer. Now let's look at median sale price. That's falling fast. It looks like it always falls this time of year, but it is threatening to drop underneath the last few years if it keeps going the way it is. $281,000, only up 3%. It peaked at 317. This line would worry me if I was hoping for higher and higher prices in Philly. If you're hoping for lower prices, this may be a good sign that prices look like they're coming down fast. Like you're not seeing a line that, typically see in markets where it's kind of leveling off and slightly going down right now with the fall. It's seems like it's dropping like a stone, like just straight down. Well, let me know what you think about Philadelphia, PA. Now we're headed out west. Phoenix, Arizona, 2.6% more listings than you had this time last year. That's good news. I mean, it was plummeting fast, probably during the summer when it was super hot. But now, and I heard this from Melody Wright, so shout out to Melody Wright, that she mentioned, hey, in Phoenix, you're going to see new listings climb in the winter time or in the fall because it gets cooler. It's easier to look for a home. Maybe that's true. Let me know what you think if you live in the Phoenix market. But nonetheless, it is up 2.6%. That's an improvement in new listings and good for inventory. Let's look at active homes for sale. See if we can find something here. Active homes, no surprise, are starting to level off. They were dropping and dropping and dropping a few weeks ago, a few months ago, but now they're leveling off. They'll probably start to go up again. That's good news if you're trying to find a house in Phoenix. Now let's find out homes sold. How many people are actually buying homes? This is all kind of clustered together. It's actually up, which is, again, not surprising that you have more people buying and closing on properties versus this time last year because you had more inventory for sale. And that more inventory earlier in the year caused people to come out and go, hey, there's more stuff to buy, probably some deals. Let me make an offer, get something underneath a traditional price that I've seen over the past few years. So that's good news. But look at median sale price in an odd turn of events. Look at this, $463,000. That's up 2% year over year. They peaked in Phoenix in 2022 at 488 grand. So now to be at 463, about a $20,000 difference. We'll see if the lower interest rates we've seen over the past 2 months has had any effect at all as we move forward in Phoenix on home prices. Will they go up again? Let me know what you think. They're going up right now. Time will tell if they go up through the rest of the year. Now out to Boston, Massachusetts. This thing like follows the seasonality every time, right? Look at this. The new listings up 7% in Boston. So more homes on the market. That's good. But it's really just following seasonality. I don't think there's anything crazy about this number. Nonetheless, though, people are putting their homes on the market more than they were this time last year. Again, that's great news if you're a buyer, right? Like all these markets, people have been waiting for price to come down, more inventory. Guess what? That's what we're seeing in a lot of areas. We are seeing prices come down from the peak earlier this year or in 2022. So it's a signal that it's time to go hunting maybe. Look at this. Active inventory now going up, really following seasonality, up 17% year over year. Let's look at homes sold. Maybe nobody's buying any homes. Let's find out. 3.9% more people buying properties, closing on homes in Boston versus last year. So now let's look at median days on market in Boston. This one stands out. Look at this, 24 days, only up 3 days year over year. So homes are basically going for about as quick as they were this time last year. It is going up, which is a good thing if you're looking to buy and get a deal maybe. If you're a seller, you probably still have to lock in that price. You don't want to get greedy. Let's look at median sale price, see how that's all trending. Median sale price up 3% year over year, $734,000. They peaked earlier this year at $794,000. I mean, a lot of this data follows new construction. There's just not a lot of new construction in Boston and in the Northeast. But I've heard people recently try to explain away the fact that there's not inventory, and they're saying, hey, inventory may not matter right now. Well, they're just lying to themselves. They know that inventory matters, but it may not be going the way that they thought it would have gone earlier in the year. I'm not like that. I'm going to give you the numbers. I don't really care what the inventory does. Just want to give you the info so you can make a decision. Let's look at new listings in Riverside County, California. This was the epicenter of the housing market crash. I actually used to live near here during the last housing crash in 2006, 7, 8, 9, 10, 11, 12. And it was crazy. Like we had more inventory than you would know what to do with, right? This time, though, for some reason, new listings have continued to decline this late summer and into fall, down 11% in new listings in Riverside, California. Now we're going to do active inventory. Look at this, continues to fall. Mark my words, you could probably see active inventory fall under 2024 and 2022 levels of inventory. Believe that. Homes sold. I mean, are people actually buying homes in Riverside? Barely, only up 1%. So most of it are just sellers that don't need to sell. They just wanted to sell. And now that they realize they're not going to get the price they want, they're like, forget it. I'm just going to take my home off the market and go home and try again some other time, maybe rent out the property. I don't know. But a home sold is not impressive either, only up 1%. Median days on market, what do we got? Well, that's actually headed down. One of the first markets where I've actually seen this start to fall, but it's still 60 days, up 15 days year over year. Homes are taking 15 days longer to sell right now than they did last year in Riverside, California. And comment below, do you see more homes sitting longer in your market? I'd like to know. Median sale price, what do we got there for Riverside? Up 1.2%, $578,000. Literally sitting there range bound, not really moving that much. And it's by no means is it crashing. There has been a decline though. I mean, actually, if I look at this, $580,000 starting the year, now $578,000. So you're actually down compared to the beginning of 2025. So there could be some price softening happening in Riverside, California, probably a lot of new construction. Let me know what you think about Riverside. All right, now let's move to San Francisco, California, where new listings are down 1.8%, but man, it's really following that seasonality. I mean, look, every year right now, it's like up and then down. So I wouldn't really think that's much of anything. It's kind of flat, I would call it, from last year regarding how many people are putting their homes on the market. Let's look at active inventory, see how that's doing. active listings under, it's actually a 4-year low for this time of year, a 4-year low. Active inventory is down 11%. What I think occurred in San Francisco is if you look at the inventory earlier in the year, it was skyrocketing. Then it completely took a break and started to fall. It is going up now, kind of following seasonality, but you have fewer homes on the market than you did this time last year. Let's look at homes sold. Are people actually buying homes in San Fran? Yeah, look at this. Up 15% year over year in the number of homes sold in San Francisco, California. Now, what about median days on market? How's that doing? Well, median days on market is now 23 days, basically flat, up only half a day. One of the weird things about San Fran is look earlier in the year. Every year, for the last several years anyway, in December is when you want to go out and look at a home. Look at this, 58 days. That was in 2024. If you look at 2025, 50 days. You look at 2023, 49 days. The point is, if you're looking for an opportunity in a market where you see median days on market up a lot in one particular time of the year, that's when you want to go out and make offers, because most people are lazy. They're going to sit on the sidelines and wait for the holidays to be over and be like, oh, well, when the holidays are over, kind of, see what's going on then. It's like, forget that. You want to be out looking on Christmas Day if you have to, because that's when sellers are least expecting somebody to make an offer. And by the way, no competition. Now let's look at median sale price. How's that doing? Wow. Look at this. Down 6% year over year. Looking for a housing market crash, folks? Well, prices have definitely fallen in San Francisco. Inventory is not skyrocketing anymore. New listings are down. Hopefully this continues, because the market there, median sale price, $1,432,000 off the hook. Now let's go to Detroit, Michigan, where new listings up 10%. Good news, because Detroit needs that inventory. Now let's go to active inventory. See how that's doing, up 11%. It's definitely a 4-year high right now. More and more homes being listed for sale in Detroit, Michigan. Eventually, you think that would cause prices to drop. But first, let's look at homes sold. Are there any buyers? Wow. Buyers down 7%. If I'm in Detroit and I'm looking for a house, I am definitely probably finding opportunities. There's less competition. There's more houses on the market. That spells trouble for home prices. They had to fall at some point because they've been crazy high. Let's look at median days on market. Then we'll look at those prices. Median days on market, it's actually down almost a day compared to last year. It is going up, but maybe I'm wrong. Maybe we're not seeing better deals in Detroit, Michigan. My guess is it's inventory people don't want. Old flip homes. I'm seeing a ton of that in Columbus, by the way. A lot of homes inside the city that are flips where the investor bought it, quartz counters when they didn't need to, put in blingy updates, way overdid the property, paid a huge price for the property, paid a huge price for the rehab. Now they're trying to put it on the market and make a killing. Not happening. They may lose their rear end, if you know what I mean. A lot of investors, I think, will do that who focus on flips versus buy and hold. But don't get it twisted. A lot of buy and hold investors are going to get crushed too as we go through this market. So look at pricing now. Let's find out how that's doing in Detroit. Yeah, it's coming down now, but it's still way high, up 8% year over year. It's dang near an all-time high. I would look for this to fall, though, because we're seeing more and more active units come on the market. However, the kind of fly in the ointment there, the monkey in the wrench, is that if the homes that are listed are crap homes, they're homes nobody wants, that will continue to increase the median price, because the homes that do sell are probably good homes that are priced higher than last year. Funny how that works, right? Now we're going to Seattle, Washington, where new listings aren't really impressing, up just 2% year over year. Inventory there, let's find out if that's going up or not. Well, it was going down. Now it's starting to level off, up 20% still. So a lot more homes for sale in Seattle, Washington. It's a 4-year high of the number of homes for sale on the market. Now let's look at homes sold. How is that doing? Homes sold up 1.4% year over year. So a few more people buying homes and then a few more people listing homes. Look at median days on market, going up fast, 23 and a half days. Not that long, actually. It's kind of way under the national average. But you're up basically 10 days year over year in how long it takes to put a house into contract in Seattle, Washington. So more and more inventory is sitting longer and longer. Look at median sale price, down, barely down, basically flat. But I mean, down a fraction of a percentage, $820,000. Started the year at 872. Now we're headed out to the Twin Cities, Minneapolis, where we've got new listings up 6%. How about active inventory? Active inventory is actually starting to fall. It's under 2024 for the first time all year. It's actually lower than last year. So you barely have fewer homes on the market than you did this time last year, but that trajectory is downwards. That's not a good thing if you want to see more and more inventory. But let's look at homes sold and see how that's doing. Homes sold is actually up 8.7%. So even though there are more new listings in Minneapolis than last year, you've got more people active in the market buying homes. Median days on market is now 26, up only 1 day. So Minneapolis still looks like a tight market when you look at these figures. I mean, as much as people don't want to hear it, there are people buying properties all over the U.S. And what about median sale price? Well, that's reflecting a tight market, certainly $396,000. Prices are up about 4% year over year. Nationally, we're only up about 2% year over year. Zillow actually has us down 0.01% year over year in home prices. So home prices overall are softening throughout the U.S., but in an area like Minneapolis, you can see it shows no sign of crashing. It wants to continue to go up and up and up. Not an all-time high. That happened earlier this year at $405,000. Man, Minneapolis is expensive. Now, $396,000, again, up 4% in Minneapolis. Now, this next metro continues to baffle the housing nerd. Maybe it baffles you if you live in Florida, but look at new listings in Tampa Bay. They're down 13% versus last year. You have a 4-year low for this time of year for new listings in Tampa Bay, Florida. I was looking for the distress. Tampa Bay was like kick rocks. Distress ain't happening. But if I look at active inventory, where's that? It's got to be up, right? You'd think active inventory skyrocketing. Man, look at this. Active inventory is actually dang near flat from last year. Basically the same amount of homes on the market. Now, earlier in the year would have been the buying opportunity maybe when there were a lot more homes on the market. Look at this. You had 20% more homes on the market at one point. Now, unless something drastically changes in Tampa over the next couple of weeks, like a lot of Airbnb owners are like, this isn't working. I got to go ahead and fire sell my property. Well, then, you're going to see active inventory fall underneath last year. And why is that? Let's look at homes sold. Look at homes sold. Down 3%. So people are certainly not buying as many homes in Tampa, but let's look a little closer at this. I should have done this in some other metros, but they sold 987 units. How many did they actually list? 1,186. So they listed more homes than actually were pulled based on selling. That would tell me a lot of these active listings are being delisted. Sellers are just like, no thanks, going to take my toys, go home, try for better days. And folks, that's a sign that they don't need to sell. They just want to sell. I think a lot of people have been projecting that there is motivated selling that's turning into distress selling, that we're forcing people to sell. There is that. That's definitely happening. Mark my words, you will see that out in the marketplace. But overall, if there was a ton of distress in the market and people had to sell, you would see a lot more new listings, especially in a place like Tampa Bay. Comment. Maybe I'm crazy. You tell me. Now let's look at median days on market in Tampa Bay. That's up 17 days, 54 days on market. Wow. And it's interesting if you look at this graph and you overlay it, or you just remember what it looks like and how it kind of started to drop with the number of days on market in earlier in the year, then go back to active inventory and take a look what happened. Active inventory started to go up during that time. So one would think like, hey, how's that possible? Why would active inventory rise so rapidly? But days on market is actually falling. Well, one of the reasons why that can happen is that you have more inventory that people can actually buy. So as all that inventory hits the market, people come in and say, I'll take that house. Thank you. And they buy it. Could also be some seller, discounts in there and sellers that are motivated. Like I said, that does happen, but it just shows you how these patterns kind of play out. As we see more and more inventory in a market, we could see more and more home sales. We could see actually prices go up potentially, if depending on what price point the houses are listed for. It's kind of the weird dynamics with supply and demand, but let's look at actual prices now and see if those are going up at all. They're actually down. Look at this, effectively flat, I suppose, but down 0.0041%. They're calling it 0% growth. So Home prices aren't skyrocketing there anymore, but they're not crashing either. Now we're headed out to Denver, Colorado, where new listings are down now 5.7%. Look back at the beginning of the year in Denver, Colorado. Look at how new listings were just going up and up and up. I mean, they weren't an all-time high, at all. That happened in 2022. But earlier this year, you had 1,600 new listings hitting the market, up 14% year over year. Now you've got 1,000 new listings hitting the market, a lot fewer new listings versus earlier in the year. And you're down 6% in new listings year over year. Fewer people putting their home on the market in Denver. And look at active inventory. It's falling. 13% more active listings than last year, but that number is coming down. I, have to think those are folks that just delisted their house. Let's find out. Homes sold. Well, actually, homes sold's up 5%. So there are people actually out there buying in Denver, Colorado. Now let's look at days on market. How's that doing? Median days on market. Wow, look at that going up, 45 days, up 17 days year over year. If I'm in Denver and I'm looking for a house, I'm hunting for anything over 45 days on market. And that's a great way to kind of attack it, right? Like, hey, I'm going to look at days on market. I'm going to look at my median days on market in my area. And then I'm going to set my search for anything over those days on market. You can ask your realtor to do this too through the MLS. Set my search for anything over 45 days. That's what I do as an investor. I set my searches for 60 days or more, even though my days on market here are way under 60 days. I set it for 60 days or more, and I don't even see a property until it hits 60 days. Then I get squirrely. So when I'm looking at this, I also want to find out the median sale price. What's that? Median sale price, $585,000, up 3%. Is that right? Wow. So according to Redfin data, Denver not crashing right now, even though I think according to Zillow, they are down year over year in the Zillow's estimate. But when it comes to Redfin's data, they're actually up 3%. Wow, that was a whirlwind tour. I hope you learned something. If you did, subscribe to my channel, like the video, share my video, and YouTube thinks you'll like my next video right here, up here. I can't tell. Is it up here? Up here somewhere.